What's up, everybody? Steve here. The other day I was watching a Grant Cardone video, and look, I think Grant Cardone's got a good amount of information out there. He does educate people. He's motivating. He definitely has good sales courses, but I gotta disagree with some of his investing approach for some of these apartment complexes. The video that I watched, he was in Savannah, Georgia, and he was talking about an apartment complex that he missed out on, and I think that the current market value was like, I think they were asking like $450,000 a door for an apartment complex. Granted, it was on the river, and he was talking about that one and some others, and he was talking about a 4% cap rate. Now, it's kind of concerning because in the last real estate recession, you know, I personally experienced it in Southwest Florida, and maybe this is not going to happen in other areas, but who knows. But we had other real estate investments, and prime example, we had a small house, and this house was bringing in, I think, about $1,600 a month. And when the real estate recession hit, there was a huge influx of inventory that came to the market for rentals. So a lot of people, for one thing, they got the hell out of apartment complexes. So that was the first thing that really took a hit. So all these people really went and transferred from an apartment complex because they were paying basically the same rent or less in rent to go to a single family home. So the apartment complexes and the condo market just got destroyed for rental purposes. But also this house that I had, we struggled. After the tenant moved out, we struggled to get $1,000 a month for this property. I think we ended up with another tenant paying like $900 a month. So let's just call it $1,500 we were making when the market was great. $1,500 a month, and then we got $900. That was a $600 a month swing. So even right now, talking to some of my investors and talking to some of our real estate agents and talking to you guys, if I'm running numbers on a rental property, I'm literally taking 70% of the rental income, the current day rental income on that property to calculate my income, because you don't know what's going to happen in the future. Are we going to have an abundant amount of rental properties hit the market? And if we do, again, it's simple supply and demand. The real estate market is insanely high right now, right? So not just for purchase, but for rent. If you're trying to rent a property here in Southwest Florida, you know, you're probably gonna pay $2 grand a month just for like a 2-bedroom, nothing kind of property. And again, supply and demand, if a lot of properties come to market, you know, let's say the market shifts and a lot of properties come to market that are going to be short sales and foreclosures, what's going to happen to the value of the property for sale? It's going to go down. And the same thing's going to happen with rentals, which I experienced in the last real estate recession. If an abundant amount of properties come to market for rent, what's going to happen to the rent rates? The rent rates are going to decrease. Now, Grant Cardone's talking about a 4% cap rate on an apartment complex, and I'm thinking, I'm like, dude, 4% cap rate, you know, granted on a multi-million-dollar property, that's a lot of money, but you gotta understand, they still have debt service on that property, and they have to service that debt. So if these apartment complexes, let's say again, supply and demand, if these apartment complexes are competing with an abundant amount of single-family homes in the community, or other luxury apartments, or whatever other type of housing, and the rents, and there's an abundant amount of rental properties, those rents will come down. So when you were relying on, let's say the apartment complex is bringing in $2,000 a month and you're looking at a 4% cap rate, and you have, say, 300 units, now your $2,000 a month, let's say the market shifts, and even if it goes down to $1,700 a month across the board, that's significant income. And I think that, you know, if people are not paying attention to the what I think are inflated rental rates, then, and you're taking debt on property, then you can be in a world of hurt. So I want to make this video. I'm curious if anybody is currently investing in Cardone Capital and if they have any kind of experience with that, with those funds, because I think that, you know, I think if the market, when the market shifts, I think that people that invested in, they might get hit, they might get hurt. Now, I think also, based on my research, and you can check out another video I did where I actually went to one of Grant Cardone's apartment complexes that he picked up in Naples, Florida. I forget what he paid for it or whatever the case is, but you know, when he started investing in apartment complexes, and I think he was buying right, but if your goal is to continually try to create these funds and try to get financing for new apartment complexes and the inventory is just not there, then it's going to be problematic. So I think some of the early funds that Grant Cardone had or has, they're probably still going to do well, but maybe some of these later funds I think might be in big trouble. Also, I didn't do enough research on the debt position or the actual the terms of any of these loans, but I assume a lot of times commercial paper, it's gonna be, they're gonna balloon out. So let's hypothetically say he overpaid for a property in Savannah, Georgia, and you're part of this fund, and let's hypothetically say that rent rates come down. Now that property, because rent rates came down, they're in direct correlation to the value of the property. If you increase rents and you add value to a commercial product, the price of the property, the value of the property is going to be higher. But let's say rent rates decrease, that property that he paid, you know, say $300 million for, now is $250 million, and his note is coming due. You know, let's say it's a 5-year term or 7-year term, whatever the case is, that note is coming due. He's got to do one of two things. He's going to have to refinance that. And how are you going to refinance it if maybe you don't have enough equity in on the deal? Maybe he does. I'm not sure with the Cardone Capital if they're doing 50% LTV. I really don't know. I don't know that information. Maybe you do. You can comment below. But let's say it's 70-30 and they're on a 70-30 and the equity position is just not there. Lenders are not going to refinance it unless they come to the table with additional funds to offset the difference in the value. So I don't know, guys. I don't know. I'm just looking at it like, you know, when you're talking 4% cap rates on apartment complexes and, you know, $400,000 plus per door, I think that things just sound, from the outside, they just sound off. So anyway, if you guys are investing in real estate, be sure that you guys are running the numbers backwards and forwards. Make sure you guys are running conservative numbers based on the rent rates. You know, I wouldn't take today's current rental market and say that that's going to be the same rent rate a year or 5 years from now. Historically, rent rates do raise over time, but you know, I think that they've just been inflated because there's such a lack of inventory, both for sale as well as for rent. So I implore you guys, just make sure you guys run your numbers backwards and forwards, and check out that video when I went and explored Grant Cardone's apartment complex in Naples, Florida. And if you have any insight on Grant Cardone, Cardone Capital, drop some comments below. I'd like to hear about it. Thanks a lot.